Hello, everyone. You're watching the FinTech Magazine Show, brought to you by FinTech Magazine, InsurTech Magazine, and BizClik Media Group. My name is Scott Birch, and as you know, every 2 weeks, bring you all the latest news, analysis, and opinions from the wide world of FinTech right here on LinkedIn, YouTube, and of course, our other digital platforms as well. Now, joining me today is FinTech and InsurTech editor Alex Clere. Hi, Alex. How are you doing today?
Hi, Scott. Yeah, very good, thank you. And how are you? More importantly, where are you?
Well, as keen-eyed viewers might have seen, I am not in Shed Studios today, and that's because I'm allegedly on annual leave, and I'm coming to you today from the United Arab Emirates. I am in Dubai, and as the song goes, by who sang it? Jimmy Buffett, not to be confused with Warren Buffett, but who knows? It's 5 o'clock somewhere, and it is 5 o'clock here in Dubai. But I can assure you, this is a refreshing glass of chilled spring water. So I am coming from Dubai today. Alex is in the UK. And talking of the UK, we recently opened a brand new office in London. If you haven't seen the pictures from that, then do check out our social platforms. But yeah, we're right in the heart of London, just by Moorgate. So please do come along and say hello. You'll find our editorial team there, events team, and our growing team of content executives and salespeople and marketing, all based in our brand spanking new London office as well. But regular viewers will also know that notice even that Joanna England is not with us today because she's also on annual leave. But FinTech and InsurTech never sleeps, so the show obviously must go on. Just to remind you as well, do come and say hello by posting in the comments section. I see a few of you have already done that, so hi. Hi to Bridget in New Jersey. Nice to have you with us. And of course, you can also go and vote in our LinkedIn poll as well. So, Alex, drum roll, what was the big question we asked people this week?
So the question we asked you on LinkedIn this week was, would you consider investing in crypto over the next few months? And the answers we gave you, the options were yes, market volatility is normal, maybe, adopt, watch and wait, or no, the potential losses are too great.
Okay, well, and obviously we'll be bringing you the results of the poll at the end of the show. I know we had a few hundred responses to this already, so I'm looking forward to seeing this. I mean, crypto is so volatile right now, which is something we discussed on the last show as well, Alex, if I seem to remember rightly. But it'll be interesting to see how people's perceptions might have changed in the last few weeks. Okay, let's kick off because we've got loads to talk about today, including the new magazine, FinTech, which is out for August, and of course the FinTech Live event coming up later this year. But let's start by taking a look at the latest FinTech and InsurTech news. All right, Alex, so it's just you today running us through the news. So why don't you start with a bit of glorious FinTech?
Yeah, of course. So my first story is from FinTech Magazine. I could have chosen a negative news story for this. On a similar topic to our LinkedIn poll, there's the story about Robinhood, who had to lay off nearly a quarter of its staff last week. But I didn't go there. I went for a story about the Australian neobank Up instead. It has launched a savings-based alternative to buy now, pay later. Now, we all know about the financial woes obviously affecting the consumer BNPL space, the layoffs and the tumbling valuations. So it is refreshing to see companies coming up with alternatives to traditional BNPL. Up has launched a new feature called May Buy, which allows consumers to create an automated savings plan for one-off purchases like clothes and jewelry that consumers find online and they want to buy. So it is a bit of an old-fashioned idea. Ever since buy now, pay later came along, we're not really used to this notion that if you can't afford something, you have to save up for it. But that's part of the problem with traditional BNPL. Up's own research found that nearly 40% of young Australians have had multiple buy now, pay later purchases active at the same time. A quarter of consumers admit to using BNPL even when they're worried that they can't afford the future repayments. So regardless of how simple a concept it might be, it almost seems, like the sort of thing you don't need a fintech solution for. I think it will actually be very popular among young consumers. And I wouldn't be surprised to see more companies coming out with innovative alternatives to buy now, pay later. Up itself says that the feature will protect consumers against buyer's remorse and that it kind of tapers the temptation to impulse buy luxury items. because, once you've saved for a product over several installments, you have the option to rethink that purchase. Do I want to buy this product after all, or shall I just use the money that I've saved and spend it on something more worthwhile?
Okay, I mean, that sounds really interesting. So just so I'm clear on this, because obviously, as I said, I am on holiday, so I haven't been keeping as up to date with the news as I thought. But they're encouraging people to save so they have enough money to buy it rather than buying it and taking out credit. Is that right?
Yeah, instead of paying for it over several installments after you've actually bought the item and received it, you save up over several installments before you go ahead anyway. And it sort of gives you a bit of a buffer, a bit of a leeway to decide, do I actually want to go ahead with this impulse buy that I wanted several months ago, or shall I use the money for something else?
Okay, well, that sounds entirely sensible. It sounds like the kind of thing that my parents and grandparents would have dreamt up. Like you said, it's not necessarily a new concept, right? Saving money for a major purchase rather than getting yourself into potential trouble by getting into debt. But yeah, interesting. And I'm glad you focused on a positive story rather than a negative, Alex, because that's how I roll. Talking of positive stories, I'm just going to shout out a few people who are joining us today. If Ernie, our video maestro, wouldn't mind pulling a few of them up on screen. I see, looking at the bottom of the list, we've got Carl joining us from Long Island. Nice to see you, Carl. We have Eduardo joining from Lima in Peru. What a fantastic place. Phil, the podmaster, Blizzard. Apologies, Phil. I will get it right next time. Greetings from Brecon. And we also have Daryl joining us from Dublin. So as you can see, we've got users and listeners from all over the world. So thanks everyone for joining us today. Now, Alex, before I get carried away, please give us some insight into the world of InsurTech and the news story that's caught your eye this week.
Yeah, of course. So my pick for InsurTech Digital is, well, you're going to start calling me the eternal optimist, because like you were just saying, this is another good news story. This time it's an example of a company doing better than it aimed for on sustainability. I feel like we hear so much about companies either missing their ESG targets or governments rolling back sustainability commitments. So I think it is worth heralding when a company is able to say, actually, we've beaten our targets. And so the insurance giant Suncorp has said it's now on track to hit zero emissions and full sustainability by the year 2030, having previously aimed for 2050. That obviously cuts its net zero timeframe down by 2 whole decades. The insurer is expected to reach 100% renewable power by 2025, and it's got a plan to electrify the majority of its fleet by 2027. One of the things that Suncorp raises is the issue of so-called Scope 3 emissions. So not the direct emissions associated with a company, but the sort of indirect financed emissions that come as a part of a company's broader supply chain. So who are fintechs and insurtechs financing? Who are you doing business with as a company? How green are they, and how green are their suppliers? So I recently spoke to a sustainability expert who claimed that Scope 3 emissions were the most important area of focus for fintechs in their pursuit of net zero, as well as one of the most overlooked areas. Companies often think about their own emissions, but forget about the emissions of their customers, the emissions of their suppliers. Suncorp says that it recognises that 90% of its own emissions come from the rest of its value chain, so Scope 3 emissions, but it's also supporting those customers, partners and suppliers to reduce their own emissions and transition to a net zero future.
Yeah, Scope 3 is a real can of worms, I suppose, if you want to call it that, to use a colloquialism or a phrase. It is a bit of a nightmare, actually. So many companies are having to, to dive into this, and having that transparency and having that visibility actually into your suppliers is not as easy as it might sound. If you're a large organization, you could have 10,000 suppliers. You've got your tier 1, your tier 2, and your tier 3 suppliers. And, there are some really smart solutions out there that are helping organizations to get that transparency and to make decisions based on data and based on the green credentials or the sustainability credentials of those suppliers. So technology providing a solution, I would hope. Now, stay with us. Now, still to come after the break, we're going to be diving more into the August issue of the magazine. And also, we've got an interview that Joanna did as well prior to going on annual leave. So that's a bit of an exclusive content. But first, let's take an ad break, and we'll see you in a few minutes.
I started Remitly after living abroad and seeing how painful, how expensive, how inconvenient it was to send money internationally. I started the company to really disrupt the $500 billion remittance industry. Of the $500 billion that is sent home every year, 8% goes to fees. That 8% is $40 billion. $40 billion earned by people living away from their family, missing their family, is not only taken, but it's taken in a way that is not transparent, and the way that it's delivered back home is inconvenient. It takes the power away from the customer. And the great thing is, because of smartphone growth and mobile phone growth generally, you can give the control and the power to people's fingertips to be able to get more money back in a much more affordable, more transparent way. And we focus so much on building out that product that is very much scalable, that we're really excited to take it into the backyard of our competitors, because we believe that when you put the customer first and you put the product first, that's how you win. Our business, I think, has the opportunity to really transform hundreds of millions of lives around the planet. Our goal, our mission, our vision as a company is to help those hundreds of millions of customers get that money back in a fundamentally better and more convenient way. And that's what motivates me every day. We've got a really underserved market, an opportunity to create a huge amount of value to customers. And so our job is to really serve that customer, to deliver on our promises so they can actually deliver on their promises to their loved ones back home. And we're just getting started.
Okay, welcome back, everyone. Now you can hear more about Remitly in the August issue of FinTech Magazine, because we have an interview as part of our 5 minutes with. I think it's 5 minutes with, isn't it, Alex? Yeah, it's our 5 minutes with interview. Yeah, do check out that. And if you don't know where to look for all this information, if you don't know where to find all these stories, all these glorious magazines we keep talking about, Ernie can wave his magic finger, and there we go. You can read more by visiting fintechmagazine.com and insurtechdigital.com. And there you will find our digital magazines. You'll find all the news stories that Alex has been mentioning, lots of opinion and insight, interviews with thought leaders, everything fintech, everything insurtech, all right on those websites. And as I said, you can read our digital issues of the magazines as well. Anyway, welcome back. As I said, still to come, we've got the results of the LinkedIn poll that we flagged at the start of the show, and a few more details about our FinTech Live event as well. But first, we've got that interview for you. Alex, why don't you lead us into that?
Yeah, of course. So before Jo went on annual leave, she interviewed the co-founder and CEO of Instander, Tim Hardcastle. Now, Instander raised $45 million in its latest funding round, and is one of those insurtechs that's clearly thriving despite the current investment difficulties. We also have the full version of that interview now on the Insurtech Digital website, so let's take a look.
In terms of the funding environment, obviously you guys have just had some success with that, but can you kind of explain to me how you're finding it as a company? What's it like for insurtechs now? There is less investment floating around. So, but is also the investment going to different areas that it was in 2021? What's happening exactly?
Well, I think the environment, there is still appetite. Capital is looking for opportunities to create a great return. I think the fundamental shift that we've seen, and the analysts have written extensively about it, you can read about it yourself. You only need to look at a few of the headline grabbing names within insurtech, and essentially the primary shift has been that the valuation of those organizations has dropped dramatically. I mean, we're not talking about a small change. We're talking anywhere between 80 and 90% reduction in value. And I think that sentiment comes from a number of factors, but fundamentally, I think there's been a shift in appreciation of the hit and hope model, which was these companies are fast growing, they'll generate revenue, and with enough funding, they will some point in the future, yet to be determined, not to be described, achieve profitability, and that the valuation models that were applied to a revenue multiple with this hit and hope view that profits would be seen as collapsed as a prevailing norm. So I think that's one of the big shifts in valuation. So the environment is very challenging in the sense that if companies are expecting to get stratospheric valuations, that will not be available. But we'll talk about it later, but the fundamentals of what makes insurtech successful and why does the insurance industry need insurtech, those fundamentals haven't gone away, right? The market, the industry still is in need of good ideas, innovation, and different ways of thinking. And you don't always find that inside some of the incumbents. Sometimes you do, but sometimes you don't. And there's a very big, important role for insurtech. But just on the funding capital side, the capital appetite is still there. There's no doubt about that. It's just, I think that one of the fundamentals of how you would value a company is dramatically changed. And then if you look at the statistics, the funding in 2021 overall globally was something in the order of, I think about 85, 87% higher than 2020. I think it was reaching about 10 billion globally. And in the first quarter of 22, we're still seeing, we saw investments of something in the order of $2.2 billion. So a little bit of, pretty much the same rate as 21, but I haven't seen the stats yet for Q2, which is where the calendar Q2, that is, that's where I think that there will be a shift in capital finding, targets to invest in. And I think the reason why there may be a delay and a slowdown is because there's this adjustment needed. The fundamentals are there, but we need the capital needs to find organizations that have got, let's say, a slightly more robust valuation and view ahead of where they're going to become profitable. And we'll touch on the profitability aspect later as well. But the conditions are obviously worse from the value side, but there's still the appetite there and the fundamentals are still there.
Hello, Alex. Sorry, I was pretending I was frozen then. Alex, so tell me a little bit more about that. I don't know the background to the interview there, but you say there's a longer version of that interview in the magazine this month. Yeah,
there's a full version of the interview actually on the website at the moment, FinTech Magazine. It is actually a really fascinating interview. He shares a lot of really useful insights from his own experience raising money through Instander. Obviously, as he says, there is a lot of uncertainty right now about securing new funding. But in spite of the economy, clearly there are still opportunities out there, and he is still bullishly optimistic about those prospects. As he said during that clip, capital is always looking for a way of making returns. It's just really those sort of fintechs and insurtechs that have previously enjoyed sky-high valuations in the past. Those are the only ones that are likely to experience some problems.
Yeah, completely agree. People are saying, you only have to look at tech stocks, for instance, and the ones that are making the biggest losses are arguably the ones that have had the most irrational exuberance. As that might be Warren Buffett again, coming back to my earlier reference. It might be Warren Buffett who coined the phrase irrational exuberance when it comes to overvaluation of certain companies. I think this is very much a correction. And, the strong will survive when it comes to the companies involved. Okay, now we've talked about August magazine there, so we should really take a look at that. There's loads of great interviews and features inside this issue. So as I said earlier, make sure you visit the websites for FinTech and InsurTech, where you can read all the latest magazines. But let's take a dive into that now, Alex. And what's your pick of the features or the profiles from this month?
Yeah, absolutely. So in a few moments, we're going to find out the results of that poll, which was all about confidence in crypto investing. And what I've done is I've actually picked out a similar topic from this month's issue of FinTech Magazine. So in the August issue of FinTech, we have lots of great content into incubators and accelerators, as well as a feature on data protection in banking. But we also have this feature about investment platforms and how they're making investing more transparent and more accessible. So obviously, it's become easier than ever for retail investors to get into the stock markets with platforms like eToro and Webull. But I think we sort of underestimate how these platforms have radically changed the nature of investing. There is far more transparency now because our investments are no longer hidden behind a fund manager, if you like, or anything like that. We've seen social technology channels play a major role in shaping the investment landscape. And so in the current issue of FinTech Magazine, we spoke to experts from across the FinTech investing space. We've got Liam Gray from Plaid, we've got the co-founder of Quarter, the managing director of Arlo Group, and the US software company Arcos Labs as well.
Excellent. And I don't know who's done the design for that layout, but I really like it. So yeah, thumbs up to that one. Excellent. And all right, well, look, we need to move on because what's the time? It's 20 past 5. Well, it's 20 past 5 here. It's 20 past 2 where you are, Alex. And it's probably, I don't know, 20 past 10 or 11 in New York. But let's move on and let's get the results of that poll. So before we get the results, Alex, just remind us, what was the question?
Yeah, of course. So the question we asked everybody on LinkedIn is, would you consider investing in crypto over the next few months? And the answers we offered were yes, market volatility is normal, maybe adopt, watch and wait, or no, the potential losses are too great.
Okay, and come on, put us out of our misery. What are people thinking? What's the sentiment right now?
So the results are, we have for yes, market volatility is normal. That is a very healthy 39% of all the answers. Maybe adopt, watch and wait. That is 24% of the answers. So that's our least popular. And then for no, potential losses are too great. That's 37. So very evenly split really between yes and no, slightly lower for maybe. And that poll is actually still live on FinTech Magazine's LinkedIn page. So we'll see how that goes. If anybody hasn't voted in it, they can still do that.
Okay, so Brexit style fine margins there when it comes to whether to invest in crypto or not. But the majority, if you like, say that yes, we're still going to be investing and market volatility is normal. But in a way, I suppose that's what you would expect. People who are already involved in crypto investing, and I imagine that's the bulk of the people who are probably, responding to the poll, are probably still being quite bullish about its future for obvious reasons, right? Because why would they be anything other than that? Okay, now we're going to move on and we're going to talk about an important date for your diary, which is, of course, the return of FinTech Live, coming back as a hybrid event in London once more. And this time it's taking place on the 1st and the 2nd of November, 2022. Now, we held the first of these shows last year at Tobacco Dock, which was amazing. But we're moving to a new venue, well, relatively new. It's only been built for a year or two, I think. And it's called Magazine London. It's in North Greenwich, so it's right next to the O2, which is a famous landmark in Greenwich. And it's overlooking the River Thames and a fantastic vista over to Canary Wharf. So it's going to be, well, it's a great venue. We're going to have some great content there. We're already got loads of great speakers lined up for that. So you can reach out now and get your tickets. So yeah, remember the dates, 1st and 2nd of November, which might seem like a long way away to you right now, being August while everyone's in holiday mood. But go and get your tickets because they are limited, of course. So moving on, I believe we have my favorite part of the week, which is the end of the show.
We do indeed, yes. In honor of you dialing in from Dubai today, our end of the show is going to be all about companies that have set up office there. So this one's all on you. We're going to show you the logos of 5 different fintechs, and we just want to know whether they've got any sort of regional office, headquarters, any physical presence in Dubai. I suppose you can say it's Dubai or not Dubai. That's the question.
I love it. I love it. Okay, well, regardless of the outcome, I love the premise. So thank you. So yeah, I'm keen and able to play. So so what have you got for me?
Well, let's start with a fairly easy one. This will really test whether you've been paying attention on the taxi ride from the airport. Let's see if we can get the first logo on screen. The first one is Standard Chartered. What do you think? Do they have a presence in Dubai or not?
Well, from what I recall, Standard Chartered used to sponsor the Dubai Marathon, and that was 15, 20 years ago. So I'm going to say that they still do have a presence in Dubai.
That is very good deduction. They do, of course, have an office. It's got its own office building in the trade centre, like many of the large banks and the big 4 accountancy firms as well. So well done. You're 1 for 1. Let's move on to our second logo if we can. PayPal, what do you think? PayPal, a massive company, but do they have an office in Dubai?
Now, you see, this is an interesting thing because as anyone who's been to the Emirates will know, quite often there are local alternatives to a lot of the most well-known apps, whether they are local versions or alternatives, or whether they are completely. Oh, I'm going to say no. Actually, I'm going to say no to PayPal.
That's a bold move. You're hedging your bets on the fact there might be too much local competition.
Well, not necessarily too much local competition, because, for instance, like earlier on, I was getting a taxi, and you can use Uber here in the UAE, but there are also local alternatives. So there's one called Careem, for instance, which does exactly what Uber does, but will also do far more, to be honest. Yeah, that's often the way that there are localized alternatives that are often more innovative and obviously more suited to the local market as well. But anyway, I'm still saying no. I'm saying no to PayPal.
Okay, well, I'm toying with you, because you're absolutely right. You're 2 for 2 PayPal. I'm sure it's got its customers in the UAE, but it does not have its own office in Dubai. So let's move on to number 3. See if you can get this 100% record. Keep it going. Adyen is the third one. What do you think about Adyen? Does it have a physical office in Dubai?
I'm going to speed this section of the show up. I'm going to say yes.
You're spot on again. 3 for 3. It's got a regional Middle East office in Dubai.
Excellent.
Number 4 is checkout.com. What do you think about checkout.com? Dubai or not Dubai?
Dubai or not Dubai? That is indeed the question. And I'm going to say Dubai.
You're right with Dubai. Yes, it does have an office. It's got an office near Dubai Media City. You're 4 for 4, and we're on to our last one. This could be a remarkable run. The final one is Circle.
Oh, the pressure. I've never got all of these right on an end of the show. I have to say it's more luck than judgment coming up here. I'm going to say Dubai or not Dubai, not Dubai.
Wow. Game show suspense, please. You've got your first 100% record, because you're absolutely right. It does not have an office in Dubai.
I'm
not bad at all.
I'm so happy. This is not a fix, by the way. Anyone who watches this show knows I normally do terribly on the end of the show. But there must be something in the air. There must be something in the air here in Dubai. There's opportunity. There's business. There's so much happening here. Maybe we'll come back to you in maybe on the next show, and we'll have some kind of update from Dubai and the UAE. But yeah, for now, Alex, thank you so much. I really enjoyed that, and I'm so glad I got a 5 out of 5. That's something for me to gloat about, not only this weekend, but also when Joanna gets back from holiday as well. But thank you so much, Alex, for hosting today's show. Thank you, everybody who's joined us from around the world to watch us talking about fintech and the new issue of FinTech Magazine. And of course, InsurTech, let's not forget InsurTech. Really hope you've enjoyed the show. As ever, big thank you to Ernie and the video team who've been pulling the strings in the background, to the marketing team, and to everyone who's been involved in putting this show together, and obviously all of our magazines as well. As ever, this has been a BizClik Media Group production, and we'll see you again in 2 weeks' time. Bye, everyone.